Alright everyone, we got the recorder going. There was a question about what implied volatility is, and I wanted to make a quick video to explain it. Okay, so what implied volatility is for a given time period with a given implied volatility and a given price of the underlying. The implied volatility for that time period is the annualized movement, standard deviation movement, over if you were to take that out for a year. So, and I think the example that they used is that if you have a stock that has a 40% implied volatility and an underlying price of 232. Let me bring in a calculator here so we can do that math. So if we have a $232 underlying and a 40% implied volatility, that's saying that 68% of the time, one standard deviation, we are going to be plus or minus $92.80 away from that original price of $232. So 232 minus 92.8, you're going to 67% of the time, 68% of the time, we are going to be above 139, and then the 232 plus 92.8, and we will be below 324. And then obviously the implied volatilities over the different time periods are going to not necessarily be the same. So for example, if we have earnings coming up in April, well, then April implied volatility is going to be higher than, let's just say, next week's implied volatility. Why? Because there's an expectation of a larger move for that April earnings report. But long story short, Bob, you asked that question. You were exactly right in your thought process. So any questions on implied volatility before this? Like I said, this is going to be a short video, but I wanted to get it out there for you guys. If there are no questions, then I'm just going to stop the recorder and get this out to you. I'm seeing a couple people typing. What's the difference between this and the expected move we did yesterday? There's no difference. That's exactly. But the only thing that we introduced into it was a different time period. We were looking at something that was, I believe, April options, which was about 36 days. So like I said, it's the annualized move for that time period. Okay. All right, I'm going to stop the recorder, and we'll just continue to look for opportunities, folks.